Welcome back to the Broker Power Up podcast, the AIME podcast for strategy, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathon Haddad. How are you?
I'm doing well, man. We got a third guest today. We're triple screening on
We got a
this.
special guest today, Jason Taormina. How are you?
Hey guys, how's it going?
Good. Glad to have you here. We have a lot going on today. We have the Broker Buzz, where we're going to be diving into the top posts of the week from the Brokers Are Best Facebook group and discuss what's trending, what's working, and what you need to know. Then we're going to dive into the sales pitch training, where Jason is going to tell us about AutoPayPlus and how you can help your borrowers. And then we will wrap things up with a story, I'm sure, that will come out of our discussion. But first, as we start every podcast, a fortune cookie.
You know, and Tommy, as you open that fortune cookie up, you said something. AutoPayPlus helps borrowers.
Yeah.
I was talking the other day about this, about becoming the consummate professional. When I first got into the industry, I was very green. Very green. I just wanted money. My family was, my family was losing stuff, trying to take care of them, trying to figure it out. And so after getting very green, you learn to overcome that. And you're like, wait, this can be a career. Hold on a second. And as you start to turn things into a career, you want to surround yourself with great human beings and refer them out to your clientele. This becomes part of your process. It's actually the easiest place for you to give a referral to a borrower after they close their loan, because the emotion is so high. That's how you become the consummate professional. Hey, I got a guy or gal. You establish the relationship, you build it up nicely, you provide value to your borrowers, and then they're always thinking about you. You want to be front of mind as often as possible. And nowadays, y'all, it's so easy to do it. So I just want to hit on that, Tommy, because I want people to understand as he goes through AutoPayPlus what it actually does, what it means for the borrowers, and how to effectively set yourself up and your family up for just a better financial future, to think about things that not everybody wants to think about. So I want to lay the groundwork there. Please pay attention to it and think about your consumers deeply on this conversation. So,
Absolutely.
All right, ready for the fortune cookie.
All right, let's go. As I make a mess on my desk. Today's fortune: clarity in decision-making is in your future. Who wants to start?
Oh, man. All right. I'm going to take this one because this one hits me hard. So I have been working with a pretty dialed-in coach for the first time ever. I actually just started rearranging my entire calendar, which is why, Tommy, we've even changed the time filming this.
Yeah, we did.
So just based on, I'm checking my brain patterns. I know this is going to sound crazy to a lot of people, but basically when the best time is for me to make decisions. And so I've been checking all this stuff. I've been working with researchers and really restructuring around data. And so I'm trying to just be better and more precise when it comes to making decisions. What I found is my days are so chaotic that, sometimes towards the end of the day, I'm walking into the house, kids might be screaming. Somebody says, John, can you make this work? And yeah, just fine. Just do it. And it's reactive, and it's really been bothering me. It's been eating at my soul. So about the last 90 days, this is new for me. So please, y'all, very new for me. 90 days ago, roughly, I started this new process. So that one hit me really hard, actually.
That's
Take
huge.
a picture of it, please.
Oh, I will. I have an envelope
send it
where
to
they
me.
all
Oh, that's
are.
right.
Yeah.
I forgot you have them all.
I'll send you a picture, though.
Jason, we'll save this one last for you. Tommy, what are your thoughts?
I don't know. I think I've been in a lot of good meetings this week, and it seems like decisions are being made or being discussed, and communication is increasing. And I think that just provides clarity, which is super exciting. So I'm hoping that clarity in decision-making, being in my future, being manager here at AIME, decision-making is something I have to do every day, multiple times a day. And like you said, sometimes your brain isn't quite in the best decision-making point, but you have to be to some degree for some things, or at least tell your team when you'll make the decision, or if you're waiting on something. But that's all part of clarity, and being able to have that for the future is pretty exciting to me. So hopefully that this is a true fortune for me.
You know, it's funny. The older I get too, the more this becomes much more. The more I go through life's journey. I'm not going to use the word older. Okay, I'm not old.
We're the same
All
age,
right?
Sean. Watch it.
Yeah, that's what I'm saying. That's why I said, hold on. But as you go through life's journey, you do start to realize how important it is to be fresh when it comes to making decisions.
Oh, absolutely. And I think it's cool that there are health devices now that can even tie into that and help you. Yep. Yeah. Yeah. My wife has one too,
Yeah.
and I'm thinking about grabbing one as well. And I think it's just having that technology is going to be life and career changing.
100%. Jason, your thoughts?
Yeah, I mean, it's super important. There's no two ways about it. You know, they Forbes did a study, right? And that was the one kind of constant across all of your Fortune 500 CEOs was the ability to be decisive. And so being able to make, you know, decisions, not only like, you know, Jonathan, to your point, sound decisions, right? Not just say it, yeah, go ahead and do it for the sake of doing it, but actually make an actual strategic, objective, data-driven decision. It's critical.
Well, you know, the last part he ended with the data-driven decision. This has taken me time to do. I've operated very, you know, from an emotional standpoint for such a big part of my life. And as I enter, I don't want to say like the corporate world, but as you enter this realm over the last probably about seven years or so now, you really like you have to get rid of it. You have to get rid of it and have to make a lot of your decisions based off data drive. Yes, there's always the gut feeling, but to your point, like that data is such an important factor when it comes to the decision-making process.
Absolutely.
It doesn't lie. It really doesn't lie. People think it lies. That's my favorite part. They're like, you really think their conversion is that? Yes, I do. I absolutely do.
No, I don't think it actually is.
Yeah, that's why. And one thing I've learned about John to be true is he's very data driven, and just being a manager under John and being able to know that if I go to him with a decision to make, and then along with that, having the data to prove the decision that I'm wanting him to lean towards, 9 times out of 10, he chooses it because the data shows it. But absolutely.
Hard to argue.
Yeah, it is. It is. Let's dive into the broker buzz with our first question of the week. We have 3 appraisals came in low by a lot these past couple of weeks. Seems odd, but all different markets. Anyone else noticing this?
So I'm not going to say I'm noticing this. I'm not going to say that, right? You never want to make absolutes when it comes to mortgages. I will tell you, though, that Fannie Mae, Freddie Mac are becoming much more strict when it comes to appraisals themselves. And so what you're seeing is appraisers, we're not going to use the word risk, but what you're seeing them is not really, they're not going to step outside of the comfort zone as often when it comes to comparables. You are seeing more of that. As you know, every residential appraisal goes into Fannie Mae's UCDP, I believe is what it is, Uniform Collateral. I forgot the exact terminology, but every appraiser in the country that's real estate specific goes into that portal. Inside of that portal, it gives you a massive risk assessment on the appraisal itself. It's ranked 1 through 5, 5 being the highest risk. You've probably seen it before. You get 4 or 5 risk on your appraisal report. You automatically see the underwriter send it to a different department for a secondary review. So that's Fannie Mae saying, hey, this is kind of risky because we have every appraisal in that area for the last 100 years, basically. So they have all that information. So they're also working on making it a much more objective process as opposed to subjective process. What you're seeing is a lot of people moving into the hybrid appraisal process that Fannie and Freddie have been pushing. You will see more of that as Fannie continues to embed AI into their systems, into their platforms. And so I'm not going to say they're coming in lower. We have to be very cautious with absolutes. What I will say that there is becoming more stringent with how the appraisal needs to be delivered to Fannie, Freddie directly. So I would pay attention to it. Read the memos that come out from Fannie Mae. They give you tremendous insight. That's how I get this information. I don't get it by, somebody coming and telling me. I literally look it up, put it in your calendar once a month to check Fannie Mae's memos. It will serve you very, very well when it comes to getting information.
Absolutely. And always remember, it's a favorite on this show. Only a Sith deals in absolutes.
100%.
And our next question. Borrower has a payment plan with the IRS and is current on their payments. They've provided screenshots of the account and payments show on bank statements, but underwriter needs a statement or letter showing balance and terms. Borrower called the IRS and was told they only send that out once when the payment plan is established, and they cannot generate it again unless the payment plan is modified. Client doesn't recall receiving that letter or they can't find it. How are you verifying IRS payment plans and terms for your borrowers?
Okay, so number one, that is not true. Okay, and I'm not saying. Let me be clear. They could have talked to a representative that just didn't know what they were doing, but that's not true. The IRS needs to give you that document. That is part of it. The second piece of it is this: they can log in online, and online the payment plan is absolutely in there. There's a shadow of a doubt. There's zero doubt in my mind that payment plan is not in there. I have literally had clients do it over 100+ times in my career. So they're going to have to sign in to ID.me, I think is whatever the irs.gov, and then the ID me situation. It's a little process if they've never set that up before. I would go, be on the phone with them. I've literally driven to my client's house one time to help her set up her account because she just wasn't as familiar with the technology side of it. So it is doable. You absolutely can pull it. Don't let the consumer tell you otherwise. Don't let the IRS representative tell you otherwise. You're trying to pay money back, right, to them. They need to provide that proof. And again, I know it's not you. I know it's the client, but push back really hard on them here. Do it strategically. I would do, hey, Mr. Mrs. Client, an easy method we can do is X, Y, or Z. We can get you to sign in. If they push back on you, they say, hey, you know what? Why don't I call the IRS? I'll conference you in and we can call them together and I can help you out. But I'm going to need your permission to talk to them. I've done all of those and you will see the client's reaction. Now, I'm only saying this, please understand it just in case, because this does happen. It's not often, but the consumer also might not want to show you. And so, hey, here's a snapshot. Here's this. I can't get a hold of them. I'm not saying that's the case, but if you offer those two solutions and the consumer starts to push back really heavy on you, that definitely needs to alert a red flag in your head. I'm not saying that's the case, but I would absolutely give that a shot.
Jason, anything you wanted to add on that one?
Yeah, I mean, that comes down to IRS. Other things come to mind, child support obligations, things like that. Sometimes you can't get that kind of documentation. They fall in that same wheelhouse, where that, there might be a little bit of concern about being transparent.
100%. That's usually, they have to give it to you though. They have to.
Absolutely. And our third question, email marketing to realtors. Any tips? Has anyone tried it? John has.
I have it saved. Okay, so if you want it, actually, you know what, Tommy? If you want this information, number one, become an AIME member for $199 a year. Number two, after you do that, email me directly and I will forward you all 24 or 26 of these, whatever it is. Here's what I did. So this was when I first got into the space. I said, okay, how am I going to connect with realtors? What am I going to do? How's this conversation going to go? So I came up with this idea where I just started cold calling all these different realtors, in a certain area. And I'd cold call them just to get their email. Now, this was right during COVID. And so we lost a lot of products the first 2 weeks. If you remember, like all the jumbo loans went out the door. All the non-QM went out the door. Financing was just weird for people. So I was like, all right, let me just make calls. Hey, my name's Jonathon and Haddad. I've been doing this for X amount of time. Look, I get it. It's a weird time right now. We don't know what's going to happen. However, I have direct insights as they come out about products that are being released. I'd love your email to send you this information on a weekly basis. What's your email address? I mean, y'all, it was almost like clockwork. Oh, yeah, here's my email. What's your name again? Oh, Jonathon and Dad. You'll see it in my email. I'll send it later. I didn't even care. I just wanted as many contacts as I could. And then I started doing this Did You Know series. And so just like the Magic School Bus, Did you know? That was me. And every week I would send it and I'd do puns in there. I'd have fun. I did little dad jokes. I'm busier than mustard trying to catch up. Like that's how I'd get them. But then I'd give them tips on selling. Hey, here's a sweet spot for this week. If you're a real estate agent, hey, I can do your marketing for you and help you with X, Y, or Z. Hey, just so you know, jumbo loans came back. It worked so well. And after about, I think it was Tommy, 16th week, if I recall, but it took 16 weeks. And I sent something about a manufactured home. And finally an agent replied, said, hey, I think I have one of these. Can you call me? I call them. I do the loan and relationship built. I built at least 3 or 4 solid relationships from that are still true to this day. Now, again, I did get probably close to 60 emails. So I want you to understand that conversion. 3 or 4 of them work with me. I sent it to 60 people. Guess what? That's a win for me. Those 4 people have put a lot of money in my pocket. They put a lot of food on my table. They've helped me save money for my kids. They've helped me get into a house. Like, that's how I look at it. So if that's what it takes, that's what it takes. So that's what I would do. If you want it from me directly, got to be a member, and you can email me, Jonathon, Jonathon at aimegroup.com.
Absolutely. And our last question of the week. I hate the idea of using AI, but I know it's necessary. Any recommendations? I know this isn't a question, but could be fun to answer. When and where to use it if you don't like using it. Jason, you want to take this one?
That one's yours.
I will take this one. That one's yours. We love AI. We think AI is fantastic. Now, having that said, AI in the right hands. AI is a great tool. I always compare it to, I'm a big DIY guy around the house, by the way, too. So my summer project, which I don't recommend anyone do this, was tearing down and reinstalling a new fence at my house.
Oh,
and so I had to put
I've been thinking about doing that, actually.
Don't do it now. Wait till it cools off.
All right.
So, I had to pull out and reinstall 32 pickets across the yard. And, I could have manually done it with the little hole, digger, things like that. Or you go out and you buy an auger, right? And it drills the hole for you. And that's kind of like AI. No one's going to look at my fence and go, that's a great fence. But, if you'd have dug it by hand, it would be a lot better, and that's just not the case. So, but again, you have to go and you have to verify. If you're just using AI and then sending it out either on your social media or in emails or things like that, it's so easy to spot nowadays. There's even, spot checkers out there where just like, the professors in college where they'll run it through somewhere. So someone that really cares, they'll call you on it and they'll see that 90% of your email is AI generated. So, if you're using it to break through writer's block or to get thoughts organized and things like that, it's a great way to get out of the starting block and get going. Should it, replace your normal train of thought or your normal process? Absolutely not.
No, I agree. That's the biggest thing. I remember when I first started using it, it was one of those things where the blank page problem, like you just can't get past it. You can't, or you're struggling. Where do I start? And then I would literally type, where do I start? I want to do this. And then it would generate something. And then I would go through it and be like, that's wrong. That's wrong. But I knew what would then need to be in that spot. So
and
then
Tommy,
I was
piggyback off that too. The typing thing obviously is great, but a lot of people don't know this. AI, just like our phones and our texts, have a microphone feature. And literally going in there, turning it on and just babbling to it. Like, hey, I really want to connect with these 60 realtors and I have no idea what to say. And, this, that, and the other, and just start running your mouth and you'll be surprised the way it can formulate thoughts together and help you organize things and just go from there. And a lot of times that kind of strain of consciousness can be even a lot more effective coming out of your mouth than you can typing it. So I highly encourage everyone to try using the microphone feature in whatever AI platform they're using.
I swear it can pick up tone too.
If you're not using Whisper Flow, oh my gosh, you're doing yourself a massive disservice. It's changed my life. I mean, it's absolutely changed my life. How fast it's just because I'm on the move all the time. To your point, it's the same thing for me. I talk to my AI every day. Like I'm prompting it daily. It knows me probably too well. I probably shared way too much information with it. Hopefully there's protection down the road, but we'll see.
Fingers crossed. But I guess to answer this person's question, I think if you don't like using it, try using it on things that you do repeatedly that you don't like doing, or can be roadblocks in your day, and try to use it to break down those roadblocks. And if you can't, then try something else. But I feel like that's the first spot that I would try to implement it in, because then it just allows you to do the things that you do want to do more throughout the day.
Agreed.
But if you want your question answered on the Broker Power Up podcast, be sure to be an AIME member in the Brokers Are Best Facebook group. If you are not, you can scan the QR code, and we will be right back to learn more about AutoPayPlus. See you in a sec.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com/membership. Your community is waiting.
And I'm waiting to learn more about AutoPayPlus. Jason, take it away.
The floor is yours, brother.
Thank you. Thank you. Actually, you know what? Before I get started, I wanted to say, and I wanted to say it earlier in the conversation, but I was on the call yesterday with Celeste. And I just want to, go ahead and say to Celeste, I've been where you are. And, my thoughts and prayers go out to you big time. I echo a lot of your story, right? Take good care of myself, exercise daily. And you're like, come on, man. Like, how did I get here? Right. So, Celeste, my thoughts and prayers are with you. So I just want to go ahead and say that real quick.
You're the man. That's awesome, Jason. Thank you for, please let's tag Celeste on there. That was you gave me goosebumps. That was really, really kind of you. That was
absolutely awesome. Absolutely. So yeah, going back into it, kind of to circle back to something that Jonathon said early on, and he talked about relationship building. And I think that, so often I go to conferences, seminars, just little, huddles, things like that. And so many times that question comes up, do you want your business to be transactional or relationship based? And, every single person in the room raises their hand that they want to run a relationship based business. The reality is the industry just doesn't really lend itself to being a relationship based business when it comes to, like Jonathon said, you have to move on to the next deal. You just have to. You can't sit there and, dwell on the last one. Once you close that deal, you do in fact have to move on. And working, backwards through your book of business is so important. And maintaining those relationships are so, so important. These people have already put trust in you one time. They are so much more likely to put trust in you again. So with us, we've been in the financing space for 20 years, and our focus has always been consumer financial literacy. And it's not just about getting into whatever asset that is. AutoPayPlus was originally started in the automotive space. Now, a lot of people are confused that auto stands for automotive. It doesn't. It stands for automated or automatic. And but the idea behind it is that the relationship only starts at the time of that purchase of that asset. And like I said, we did start in the automotive space, but we stay with our consumers, which we call members, because we consider it more of a membership model, that we stay with them the entire time. And, we're touching base with them, like John said, like the did you knows, right? Did you know you have X amount of new equity in this asset? So if you are in the market for something else, you now have this much more usable equity in that asset because of your strategic repayment plan that you've, stayed very, very diligent with. And that in and of itself builds that relationship. They see you as their trusted financial concierge. It's helping them stay on track. I like to use the analogy of like your financial personal trainer, right? We do the things when you don't want to go, right? You don't want to wake up at 4 or 5 in the morning, go to the gym, you're tired, you're sore, you're whatever. We come in and we drag you out of bed and we get you in there and get you on the treadmill, right? And that's kind of the same idea, is that we make sure that all of your obligations come first. So, the little consumer in the back of your head when all the Black Friday things start coming up and you want to go spend it on Prime days and things like that, we will still keep you focused and keep you on track to make sure that you're making the most out of the most important assets you have in your life, whether it is your mortgage, whether it is your auto, whether it's paying down student loans faster, credit card debt, all the things that lead into a qualification for a first home, a second home, your first investment property, all those things. So we are very, very much focused on the relationship between ourselves and our member.
Just, I have a question on that. So for those that like have never seen the system or used the system before, basically the concept here is we assess your finances. We see how much you're bringing in. Okay. Whether it's the paychecks, however the integrations are. And then from there, we're going to push that against your debt obligations. And then from that perspective, we see what you pay, your rate. And then what we're doing is we're saying, okay, AutoPayPlus is going to look at that information and say to you, hey, and then take it from there. Like, what does it tell you after that process?
Yeah, absolutely. And I guess the best place to start when it comes to that is think of like DTI, right? You see folks anywhere from like 46% and up, in their back end DTI. We all know what that means, right? That means that 50% of their income is already spoken for, and that's pre-tax, right? So afterwards, in today's economy, it's tough. It really, really is. It doesn't leave a lot of room for all the unforeseens, right? Everything from a medical surprise to an auto accident to some sort of home repair to all these things. And, there's a lot of folks in that scenario that really are just getting by. And, they don't realize that because they need the house, right? And maybe they never wanted to be in that 50% DTI bracket. Maybe they're, going in, they were like, oh, I want to be somewhere around 44%. But then you can't find a house near the right school or work or the grandparents to help with childcare or whatever that case may be. And now you found yourself way further extended than you ever planned to be. So we look at that, Jonathan, to your point, from end to end and say, hey, where can we do here? Where can we help to? Because obviously we can't change our members' payments. The idea is to match their payments to their paycheck on a cycle that works for them. So we're paying their payments on how they get paid, not how that lending institution wants to be paid.
You're teaching them the fractionalized banking system. You're kind of just teaching them how everything works, right? Like educating the consumers all the way through on how to leverage money, how to make sure you're not overspending. I have a question for, so the way it works on your side, there's the mortgage side, auto, student loans, credit cards, recreational. You guys have an unbelievable amount of reviews. Now, if I'm a loan officer and there's an opportunity here for me to partner with AutoPayPlus and I start referring my consumers, have you had LOs that have been successful? Is there something that they say? What's that conversation potentially look like, and how easy is it for the clients to sign up?
Yeah, absolutely. So, part of what makes us unique is that, we are not a transaction service. You can sign up your loan. The loan has to be established, number one, otherwise there's no loan for us to service. So we're not part of the transaction. Your deal is going to get or not get to the closing table with or without us. So we have no bearing on that. So folks can really sign up, at any time, whether it's a week outside of closing, whether it's 6 months later, a year later, the benefits are still there. On your typical biweekly payment strategy on a 30-year fixed, you're looking at anywhere between 6 and 8 years off of the term of the loan, and typically on today's average home price, over $100,000 saved in total cost of interest borrowing.
That's absurd.
Yeah,
that's
it is. So,
especially right now.
Yeah.
So to your point, this can be someone who we closed yesterday, right? Who we know is at that 50% DTI bracket, and we're like, hey, listen, it's great. You're excited right now. You're in the house, all is well. But just so you know, we did talk about that, 50% is a pretty high DTI. Let's go ahead and let's revisit that conversation for how we can keep you on the straight and narrow moving forward. And you take that same conversation and go into your back book, for all your other folks that you closed in the past 12 months that were in similar situations, and go back and help them restart that conversation. Did you know that, we can help you out? Hey, did you know, is your mortgage still working for you today? I know that it was at the time, but in 12 months, a lot of life can happen.
Absolutely. 6 months.
6 months tomorrow, right?
Yeah.
Hey, you know what's I was thinking about as you're going through that process, especially now if they don't have a house but they have like auto credit cards, right, is that they still have the ability to sign up?
Yes, absolutely. And we actually do go ahead, you first.
No, no, no. Please. I just it's a thought for LOs out there. For me, it's like we all have those clients that are super close to qualifying. Okay.
Mhm.
And they're right there on the edge, but they might be missing it, or they might want a house that's maybe $50,000 above budget. So in this, especially right now, it's just nice to have an option like this where you can check in 2 to 3 weeks, a month, 2 months, three, and you put it in the calendar and it becomes your talking point with the client. Like imagine that's the conversation. They're borderline qualifying. They want something a little bit bigger. You say, look, here's what we have to do in order for you to make this work. They set you up with this, and then every month you're just calling to check in. Hey, let's take a look. Let's have another review. So I just think about such easy ways to leverage the service.
Yeah. And going back, you heard me mention before, like the 6 to 8 years off of a 30-year loan, right? But even in like 4 short years, you can take your equity up substantially, right? So now when we talk about a loan officer or a real estate agent, and we're talking about like their sales cycle, let's say their normal sales cycle for someone is every 6 to 8 years before they see that person again, right? They get back in their pipeline. Now we're talking about shortening the sales cycle and being able to help someone again quicker, right? So we're helping them build equity faster. So now that turns into usable equity they can use for a kitchen renovation, a home renovation, pull out a HELOC, do whatever that needs to do to help, benefit that family in whatever stage of life they're in and help them faster, which and then shortens the sales cycle for you.
That's a big deal, yo. Especially retention right now. That's what we've been talking about on our side of things. Staying in front of the consumers, always having a talking point, something you can do to stay in front of them, especially if they're paying down their balances at a faster clip. That makes the refinance process easier. It just makes the whole thing easier. And the system is taking money that they're already making and just, hey, this is better off put here. Is that like just at a very high level overview?
Yeah, absolutely. And I started to say before with, when you start to have that conversation and, the whole improved financial literacy, we actually do a 6-month open enrollment period. So if someone was to enroll their home with us, they can enroll every other trade line they want to into our program in the first 6 months with no program fees at all.
So the company's been around since for how long now? Since 2000?
A little over 20 years.
So 2003, right? Roughly.
Yeah.
So how has this environment changed from what you've seen from a data perspective? And what are you seeing a lot more of? I feel like consumers now are much more cost conscious than they've ever been before. But you might have more data on that. What have you seen over the last, I would say call it pre-COVID and then post-COVID is probably my guess on this here.
Yeah. So I'll use automotive for a little bit of a temperature check on where the economy was for us during COVID. The negative equity was massive. That was a massive problem for our dealer partners because all of these vehicles were getting sold so high over MSRP that they were coming back with tons of negative equity, and the dealers had no idea what to do with it. So we were very instrumental with our dealer partners. We partnered with dealers all over the country and helping them make sure that those vehicles returned back to them with less negative equity so they could actually make a deal for these people that needed to upgrade a vehicle, needed to get out of a vehicle, a different size, different style, because otherwise they had so much negative equity in that vehicle. There was nothing these dealers could do to help these folks out. So that was like our post-COVID, thing. That was the big talking point. But really when it comes down to it now, it's affordability, and it's affordability across the board, whether we're talking in the mortgage space, in the auto space, it's all about affordability. Like prices are not coming down, and the rate of commerce is growing so much faster than income.
Brother, are you saying you guys went to the automotive industry, all these companies, and were like, hey, here's our product. We can help teach your consumers that have these cars how to pay these down. So when they come back, you can make sure they're taken care of?
Yeah.
So this is where my sales excitement comes in. Does your team come in and push it out? Do they push it out to their clients? That to me, I don't know about y'all, that's such a mind-blowing like concept to think about that, automotive companies calling you like, yo, we don't know what to do. Here's our problem.
Mm-hmm.
how's that sales process for something at that kind of scale? Because now you're making me think about, all right, if I have 10,000 past clients in
Yeah.
my database, where do you start that framework from an implementation? Like, where would I start with my 10,000 consumers?
Yeah. So, if we're going off of the same idea, you would look at the ones that are the most, in that conversation upside down,
Yep.
right? But in this case, it'd be going back and trying to target those folks with the high like DTI. Like that's where you would start. You would try and segment those folks, find out who they are, either that or folks that are in, maybe weren't in a great equity position, due to payment, due to rate, and, help them, teach them, hey, listen, this was their starter home. Eventually they're going to get into that second home. How do we position them even better when they're going into their second home to bring as much equity to that next transaction as they possibly can?
I don't take notes often on these calls, but I grabbed my pen.
I saw that one.
You. Yeah, you saw that one. I was going to say, I was like, hold on. You got my brain. You got it moving very, very quickly, especially with how much you're working on. I have one more question, and then whatever you want to say to close this out, please. The floor is yours. I know we gave you the AI question, but how has the AI changed this experience? How has it made it better?
Yeah. So right now, the biggest thing, my CEO is an incredible man, visionary. He truly believes in what he does and what we do here. And he has taken our existing model and basically supercharged it with AI. So we're taking and we're building out all of our tools bigger and better, making them more intuitive, making them look at your finances across the board, making them more not just reactive, but predictive. So we can start to, realize spending behavior, start to realize, possible, NSFs, like future predictors, things like that. Like, hey, don't do this, or this might be the outcome. And that all comes from artificial intelligence.
Listen, the floor is yours. One thing, y'all, data is changing the world. And I have goosebumps saying this to all of you because I feel like there's so many people out there that think it's like a joke. There are companies right now that you use that are selling data constantly. Even these trackers, they sell it. I know they sell it. They're selling data to cities to learn walking, where people are walking. Data is now being sold at the granular level. Credit companies are trying to get you to spend constantly. It's a consumerism type of situation that we're going to continue to go into. And the more data they have on you, the easier it is for them to sell to you. There's nothing you can do about it, whether you like it or not. So every once in a while, you get a company that's on the other side. And yes, they're here to make money too. They have to pay bills and put food on their table. But you have a company that's here to teach you about that process, about financing, to be more disciplined. We're in the most debt we've ever had as a nation when it comes to credit card debt. $1.3 trillion. It's not even close. So what are you doing? What plan do you have? What conversations do you have with your clients? Because everyone else that's talking to your clients is trying to get them to spend their money. You come in and get a chance to be the hero. And that's kind of one of the notes I wrote down. I want to share that with you. And Jason, the floor is yours for us to close this out. Tommy.
I had one question too. John and I have noticed a trend and where potential home buyers are becoming more educated using AI. Then they'll come to the broker and be like, they feel like they're more knowledgeable than the first-time buyers used to be. But then as the LO, you have to assert yourself as the professional and be like, yes, AI, I'm glad you asked that. Try asking it this way or that way, and kind of help them come up with their prompts to kind of then backwards reassert yourself as the professional. Are you guys noticing something where people are coming to you with, oh, well, I actually know I asked ChatGPT this financial decision and I think it should be this or that? Like, are people coming at you with those kind of things?
Yeah, we do. Yeah. We get those kind of like more detailed questions now where you start to hear words come out of consumers' mouths that you never heard before, right? Like you start to hear things like the word amortize come out of a consumer's mouth and you're like, where'd you hear that from? And so those kind of things, like that's not the normal. That's like when your kid come home from school and, you call them out on like, you heard it. Where did you hear that word from? So, so we are in such a digital information age right now, where everything's at your fingertips. Everything is now. Granted, there's a lot of misinformation out there, and that's where it's all of our responsibility to be, the industry professional and, be able to help them navigate through some of that misinformation. But absolutely, yeah, we are seeing, a much higher level, and we love to see it. We love to see the adoption. We love to see the hunger for, educating themselves before they make any sort of financial purchase. Large.
Absolutely.
Jason, the floor is yours, man. Anything you want to close us out with?
Yeah. To your point about the data, and I can't remember which company it was. It was one of the big insurance companies, Allstate, State Farm, Progressive, one of those. And basically when they were asked, what's it like being the largest insurance company in the country, they said, we're not an insurance company, we're a data company. And that's just what it comes down to. It comes down to being able to look back, to be able to look forward and see where you came from, see the data you collected, and then make really, really educated and strategic decisions against that. And, all of our mortgage partners out there, that's the same thing that we try and ingrain with them, because everything they do at the time of that transaction paves the way forward for that person. And it helps you. If you were already here as the trusted expert, it comes with a little bit of understanding that, we spend a lot of time with our buyers at the time, right? By the end of it, like I used to joke that you probably know what they want on their hot dog by the transaction day, because you spend so much time with them. But it's kind of an unspoken thing that at the end of it, we know we're going to go ahead and we're going to part ways, right? It's like going off to college. And so we know that. But this is a great way to really, really not just tell someone that you actually care about them after the closing of their loan, but actually show them and actually teach them and, give them that ability to take care of themselves and take care of their family in that new home.
Thank you very much, brother. We appreciate you.
Thank you for having me.
Mhm.
Thank you. And thank you, listener, for tuning in to this episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor. Hit the like button to let us know you enjoyed it, which helps even more people see this content. Subscribe to our YouTube channel and ring the bell to get notified every time we drop new content. Share this video with a fellow broker who could use a power up. Remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.